What?
Little bit of a weak close. Who cares? Buy the dip back over 4,800. Where's the resistance in this market? Not much earnings. We got some stocks on the move. A couple tricky movers this morning. Nvidia and Costco traded in the red. 8:35. Craig Johnson, Piper Sandler. He's made some good calls. We'll see what he says about 2024. It's a Tuesday. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elkanin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
Good morning, traders, investors, creeping higher. In fact, we're right at yesterday's high. Just no resistance in sight. Up 10.5 handles, 48.0350. The buck kind of quiet here. The dollar futures running into a little roadblock here in the lower 102 handle. See if we can clear that. It's down 9 cents at 102.01. Bonds up 3/4 of a point at 124 even after the rollover. Crude yo-yo market, but down 28 cents at 72.54. Gold steady in the 2,000 handle, up 360 at 20.4410. Silver up 16 cents, a little bit more on a percentage basis at 24.28. Bitcoin futures up a grand, down a grand, up a grand today, up $1,120 at 43,225. I'm going to bring in Triple D here. Triple D, I just see some mega caps go red here, just brief, momentarily. Maybe some prints from yesterday, but come on in, Triple D,
Oh,
and
definitely. Yeah, some prints from yesterday for sure. The 8 o'clock print screwing everything up again. You got Apple that's showing down 18 cents, is not down 18 cents, it is up 70 cents. Microsoft showing down 50 cents, it is not down 50 cents, it is up $1.20. Why? Look at the level 2, you can see that. I
yep.
don't know why these 8 o'clock prints want to all hit the tape like the late prints, screwing it all up. Our quote providers just need to start ignoring FINRA in the pre-market. I mean, sometimes it's inside the market, and again, this is a market structure thing. Half the trades cross on FINRA. That's everything done off exchange, and who knows what that is because they don't tell us. Half the, we've complained about this before, but one thing we definitely need, regulators. I know some of you are listening. We need more transparency in the FINRA tape because there's no way for us to definitively tell what the hell these individual FINRA trades are because there's like 50 things that hits. It's
Bam, bam,
off
bam, bam,
exchange,
bam,
all
bam.
off
Yep.
exchange trading hits on FINRA tape. So you got dark pools, you got Citadel and Virtu, and your off exchange market makers hitting there. You got Liquidnet doing crosses over there. You got every other institution doing dark crosses over there. All kinds of stuff that hits that FINRA tape, but they just classify it all as FINRA. You couldn't have two things more different than Liquidnet and then, it's Citadel's market making. You got big institutions coming together, like trying to, not have big price, impact. And then you have little minute retail trades over here, all classified as the same thing on the FINRA tape. It's absolutely ridiculous. We've been asking for more transparency in that tape for a long time. So why these, trades all happen at 8 o'clock, 8:03? I've speculated that they are late trades to the tape because they are never within the market and they're usually done at the closing price or lower, or usually done at the closing price. But we really don't know because they don't tell us what those trades are.
You know
So anyway,
what's
already
interesting too?
ranting. I'm ranting 2 minutes into
Yeah,
the
I
day. I'm
know. No,
wound
no,
up
no. But
already.
I'm not noticing it now. But during the day on the CNBC, I was seeing like the prints going out to 4 decimals. Now I don't really see it right now. I don't know if they're showing the closing prints or maybe they corrected it. But I looked at it and I'm like, because what a decimal hater I am. But then going out to 3 or 4 decimals.
No,
But
it's ridiculous too.
anyways, we got Money Mitch back in the house here today. So let's bring Mitch on. Mitch, good morning to you on this Tuesday. We'll let you drive the bus here on it's a news Tuesday, but it's kind of hard to find the news.
Yeah, a lot of macro situations going on out there. And of course, it's near the end of the year. So a little bit of some slowdown kind of expected, right? Not too
Mhm.
many PRs coming out and people taking holiday breaks, things like that. So I think that's what's weighing in on the markets here. Let's talk about, of course, Iran backed Houthi militants here have targeted ships in the Red Sea, causing disruptions in global trades. To address this, a coalition led by the U.S., along with several countries, plans to form a force of safeguards in the region. Major shipping companies are diverting their journeys immediately to ensure the safeties of these vessels. This collective action affects approximately 60% of global trade. Additionally, you're seeing BP announcing a pause to its shipping activities in the Red Sea due to the ongoing attacks. So this could affect a lot of different areas. And this could have been the reason why I started seeing the shipping companies start to move like 2 or 3 days ago. I even caught some of them like Zim, Starboak. They started moving. So I think that these can affect the shipping companies. I think this can affect the oil trade. What do you guys see in this situation?
It's a serious situation going over there. I mean, these pirates, we've talked about this stuff. It's kind of, it makes you think of that. What's that movie with Tom Hanks? Captain, not Captain. Is it Captain something?
Castaway, what?
No, not Castle. The pirates. Joel, you know the movie. Tom.
Oh,
Pirates of the Caribbean?
there you go. That's Joel's
Gosh,
favorite
you
one.
guys haven't seen the movie? It's a newer movie. It's like 3-4 years ago. The one that he's going off the coast of Africa. Captain Phillips. Captain
Captain
Phillips.
Phillips,
You never
man.
watched Captain Phillips?
No, we did not
It's an
watch Captain
awesome
Phillips.
movie.
Joel,
That
we
is an
need to
awesome
watch
movie. Hey,
Captain
Tom
Phillips.
Hanks is always an awesome movie, but that is an awesome movie.
Yeah.
And it's pirates, and it's talking exactly about this, where
Yeah.
you've got individuals jumping on and taking over these big ships. And and they don't have a lot of they're coming on like pirates in the little boats. They get on there, take over the ship, and hold everything hostage. So I mean, this is real, and this is a serious issue. Now again, how it affects everything. Does it cause oil prices to continue to spike up here? It always seems like there's something talking about oil, so it's hard to figure out all that. I don't know when you get into the Zim shipping and stuff. That's such a small company that everybody was caught for the dividend in it. We're squeezing stuff like that right now, so anything that
Uh-huh.
has been a laggard, that stock's just going up because of the laggard trade. But maybe it's a catalyst.
Crude gets
Great movie
pops
though.
off this. It had a big pop. Yeah, I mean, it gets pops off this, and then now it's over $2 from the high from yesterday. So I mean, you know what? I think, and I've been right, been wrong, or whatever. Well, I just think no matter what, no matter what these figures that you hear out of OPEC, no matter what you hear out of Russia, there's someone pumping. There's Venezuela or wherever, the U.S. I mean, these figures that you're getting, they're pulling it out of the ground at 55, $60 a barrel. They don't care. They're pumping on the market.
Do you
So
know how
I
much they pull out? Do you know overseas in the Middle East what they pull that out for, Joel? Do you know how much it costs them to pull out a barrel of
don't
oil over there?
15.
It's like six
20.
bucks,
Oh man.
$7 they pull it out for. It's crazy how much cheaper they pull it out over there.
I
So
mean,
and again,
the
maybe I'm
Saudis
thinking
didn't get
for
rich
years
for
because we
no
have
reason,
inflation.
man.
So maybe it's 10 now because we have inflation and everything is
Yep.
doubled. But I mean, it's unbelievable how cheap they can pull it out over there.
Oh.
They pull it out really cheap.
What do you think about some of these shipping stocks? Are we going to get another kind of situation that happened? I think it was in 2018. Maybe
It may have
2017?
been sooner than that. You talking about the Suez Canal when we had the problems there?
No, we had
Blockage?
this huge like squeeze in shipping stocks when I first started getting into trading. I remember I was
Oh,
in college
there's
and
always
it
one of
was
those.
Eagles, it was ships,
Oh
it
yeah.
was
What
tops,
dry ships?
it
Remember
was
dry?
dry
That's long
ships.
gone.
Do you remember that, guys? Do you remember that action?
The
Oh,
death
This is
dry.
spiral financing of dry ships
well,
where it
one of those
just
stocks.
reverse split and then fall and then reverse split and then
Yeah.
fall. And the all-time high was like $10 million.
One of the stocks that did move when that happened, and I remember I actually rode this one up for like an insane win. I
Which
remember
one?
Eagle bulk
It's
ships,
still around.
Oh
EGLE.
Eagle
yeah,
is.
it's one of the good ones, man. That's $54 a
Look at
share.
the monthly though. The monthly reverse
Oh, is it
splits
one of those?
goes up to $2,448.
Yeah, they got some reverse splits in these. That's telling you long-term investments, these things are not. That's my Yoda
Yeah.
talk for you this morning.
You guys remember
Long-term
that?
investments, these things are not short-term trades. These things can be very good at times.
There was another one too, wasn't there? That
Like,
there was
not
this
20 of tops.
It was
TOPS
Tops and
and
Tops.
Ships,
That's what I'm thinking of. This
SHIP,
Tops, and there was Diana
SHIP.
Shipping, DSX. That was another one.
Yeah, and
You're
so
trying
there's
to
some
figure
new
them all
ones.
out.
There's some new ones that I would focus on, right? Zim and Starbuck are some of the ones that I'd focus on here. They've already gotten the move already, SBLK, ZIM. But you guys can also watch like a more expensive stock like a MATX. That's Matson Inc. And then you also got KEX, Kirby Corp. So these
Kirby's a big company.
these are shipping ports, shipping and ports. They're in that industry, so they
What
could
was the
get
one
the lift.
before you said KEX? Because that looks like a real stock.
MATX.
That looks like a real stock.
Matson. I do not know Matson. MATX.
Have you ever traded Matson, Dennis?
No. You found a stock, and there's very few in this market that are above $5 that I've never traded before. But I know nothing about Matson. I'm Googling Matson right now to find out more about Matson. Matson Inc. Honolulu, Hawaii. Is this the right company?
I would think so. It's in the industrial sector, shipping and ports. So just keep a watch on these, right? These
leader in Pacific shipping since 1882. Man, I guess because I've never been to Hawaii.
1882s, and you
I
don't
know, and I
it,
didn't know
Dennis?
this company.
Come on,
Shame
man.
on me that I didn't know Matson.
All right, but also this could affect the oil trade, right? I've been playing some oil game. What have you guys think about oil lately? I know I haven't been here for a couple days, so
I think if we're calling off the recession, I think you got to be buying oil stocks. So you want the laggard list? Okay, the laggard list got bigger, folks. So here we go. My laggard list so far. This is not for today.
Look at the handwriting.
2024 January 1. Bob at the top. Pfizer, the ultimate laggard. That stock just sucks. SE. Remember how much of a darling that was back in 2020, 2021? That stock sucks too. That's sitting near a 52-week low. And I just put Polaris on it this morning for Joel.
Polaris.
Because we were talking about all these stocks that have high ticket prices that haven't been running. Well, PII has not run yet. Some of them have. Winnebago's run. GM's been running. Ford's been running. Polaris been left in the dust. Just sitting there looking like it wants to go. So that's on my laggard list. You know what else is getting added to it right now on my laggard list?
What's on there?
What we started talking about. Oil. I'm not talking the stock. I'm talking all the stocks. This is your January effect. These are the stocks.
Yes, don't show everyone. Don't show everybody.
Don't worry. No one can read that.
You can read it. It's clear. I do this every day. Look, this is my list. Look. This is what I write. This is how I do
the gold. You guys are getting the gold this morning.
Dividends go over here. Stocks reporting after hours. Stocks reporting pre-market. Look, I got the X antitrust.
Everyone's screenshotting this right now.
That's fine. That's all my hits. I give out my ideas.
I saw the pizza order at the bottom there, Dennis.
Take out the trash.
Yeah.
Get a haircut.
Get a new job. I know they tell me that all the time.
So you're all in on the
get a haircut and get a real job. Clean your act up and don't be a slob. George Thorogood was phenomenal.
So Baba's the one now. I mean, that's an interesting chart, man. I saw Bob on
Dave
top
says
of the
I
list.
did screenshot it actually. Nice.
Hey, you got to take it when you can get it, man. And definitely, you got to have your shopping list, right? Because moments like this, if you didn't have it ready, well, then you don't even have anything to go to. You got to start doing
Oxy
the research.
on it too. Warren Buffett Oxy, oil Oxy.
I grabbed a little bit of Valero before I left, and that's not looking too bad.
How's it doing? Is it coming?
That's a sleepy
They're starting
one.
to try.
That's a sleepy one, Valero.
But back to your original question. If we are calling off the recession because the Fed has pivoted, then we need to be looking at laggards. And laggard trade starts January 1. It started early, and it's been going for a while here because of the pivot. Maybe you get a little pullback, maybe you get a little tax loss selling the end of the year, pulls you back a little bit, and then that's going to be our entry point where we enter all these stocks and win money in 2024.
Kathy Wood, baby. All right, so So there's of course more Fed talk that could come out today. I know there's a Fed that's going to be speaking today, so watch out for that. Daly also told the Wall Street Journal that Fed rate cuts are likely to be appropriate next year because of an improvement in inflation and that there was a risk for policy stance being too tight. What does that mean there? I feel like that last little bit is really interesting, that there was risk for the policy stance to being too tight. That might mean that they saw the recession coming if they would have left rates where they were.
They're, again, to our point, Mitch, they're in the prediction business now. They are no longer in the data dependence business. They are now in the prediction business because they have pivoted without having the data to support it, and they are talking about what is going to happen. That is called the prediction business, folks. The Fed has switched business. Powell has switched business. He is now into the prediction business, and that changes everything.
Well, maybe Powell was right all along that this inflation was just transitory.
Oh yeah, for sure. And
Yeah,
he's right that they've beaten inflation, and inflation is
because it
gone
was
forever.
transitory.
Our
We just
biggest
needed-
risk now is deflation. Prices going down. You know when you go out, and you know everybody's going to want to take wage cuts because for the better of society, that everybody's going to be saying, "Oh yes, you know, for Christmas, Mr. Boss, for my New Year's, you know, present or whatever, I'd like a wage cut."
No,
Yeah,
inflation's
that's
gone
happening.
down, Dennis, so you don't get as much anymore.
Yeah,
No,
inflation.
that's not the way it works, man. Not the way it works. And what people have been, the consumer is going to stay strong, but one of those ways they're going to stay strong, I think, is, raise my salary. Then I can stay strong, right?
They're still asking for it. Tesla. This is a good segue. Look, we never segue. We just go random thoughts. We can. This is a segue, and I grabbed it for you here, Mitch, because
Go
talking
for it,
about wage
Dennis.
increases. Look at Musk talking about wage increases.
Tesla aims to hike the hourly rates for the fixed rate employees at its manufacturing unit in Sparks, Nevada, with increases ranging from $2 to $8.30 per hour. The lowest wages would see the wages rise from 20 to 22 per hour, and then some of these employees all from 26.20 to 30.65 now raised all the way up to 34.50. This was reported by CNBC on Wednesday. We had already talked about this with the UAW talk and how it was going to push some of those workers to just knock on Elon's door and say the same thing. Hey, where's my money?
Wow. They were talking about $22, $30 an hour auto workers. Where do they go here at Ford and GM? What are they talking? And
They're like
again,
at
these
40s,
the all-in
right?
numbers were like
44s?
90. Yeah, what's Ford? But what's the wage? So the wage isn't that high. It's like the benefits and everything. So we got to compare apples to apples. What's the wage of Ford and GM? 50? 55?
I'm pulling up the exact here.
He's finding it. Mitch gonna get this so we don't get a million people hating on us here.
No, I don't want to give the wrong answer there. I want to give the exact dollar wage.
They said it ranges from
22 to 34 at Tesla.
You're talking Tesla and Ford. What I came up is a big old range there. I think it depends a lot on your seniority and
All right, so I have it. So the top employees would be making more than $40 an hour, compared to, let's say, $34.50 at the top.
That's at the high end. So the low end of Ford's like 40, the high end of Tesla can be like 34. And then you get your benefits and everything else that really blows that number out of the water, makes it go a lot higher. But regardless, he's still doing something right because, his employees obviously haven't had this, aren't getting paid nearly as much and they're still working. So Musk's figured it out somehow. He says because they got more employee stock ownership, but they got stock ownership of Ford and GM too. So I'm not sure that's the reason.
Yeah, but the stocks have gone down.
Yeah, I know. Yeah, nobody likes the Ford GM stock ownership because the stocks go down. They love the Tesla stock ownership because the stock keeps flying. So that's probably why. It's stock performance that allows him to keep the wages down. Man, that's like, what came first, the chicken or the egg, type of like the deal. That's pretty good. Go.
That's true. Let's talk about Apple as they're bracing itself for $17 billion in pending ban imposed by the International Trade Commission. This is posing a risk to its smartwatch operations. The ban is due to come in effect on December 25th. Apple intends to stop selling the Series 9 and the Ultra 2 model watches on the website and brick-and-mortar stores by Thursday, December 24th. So, of course, this is a kind of a back and forth battle, has all to do with kind of the oxygen kind of algorithm reading on the watch.
Correct. Yep.
So that's really where this comes back to. And it's kind of a battle of kind of one thing is that they're trying to make a settlement deal right now with Massimo. But what do you guys think about this situation? Do you really think it's going to affect the bottom line of Apple here?
No. Well,
Not
what is
at
the
all.
watch sales? Like 1% of their sales? It's something stupidly low. I mean, if this was iPhone, it's a big deal. It's not iPhone, it's Apple Watch. I don't know. It's more than 1%, but it isn't 5%, I don't think, Apple Watch. I don't think it's 5. I don't know. I don't have the numbers in front of
I
me
don't
here,
have
but
the
it's a
numbers
very
either.
small portion. Apple Watch is a very small portion of their overall revenue. Very small.
Yeah.
So, I mean, we can't sell a couple of watches. It's not going to affect Apple stock. Does it affect Massimo? I mean, that stock's been moving up on this. They're going to get a settlement. They're going to get, paid some money here because MASI, which has been an absolute dog this year, started the year up at about $140, ran to $190, then bottomed out in October when everything bottomed at $75. It's been running here. We're up to 115, so we're on the comeback trail here.
Symbol me on that one.
MASI. Michael Alpha Simon Ida.
Okay, because you both thought that
you're Ida.
We talk over each other on this show.
Yeah, that's how we do it, baby.
Okay. I just going to Apple here real quick. So this has gotten hit with a double dose of bad news, right? Over the last couple days, they got hit with more China regulations. I think that was a tape bomb after the close on Friday, and now this, and
nobody cares.
And 200 on the way, man. We're gonna get to 200.
200
down on bad news in bull markets.
Yeah,
200.
I'll just technically here. If you got stuck yesterday, you did have the gap down. You got a gap fill at 197. That's just a minor number. And then your 2-day close 197.57. So those are just some levels coming into play. If you bought the dip yesterday and you're just looking to pair out because it's trading up on bad news, and you know what? Can we figure out what's going on with NVIDIA? Did we figure that out yet, or are we just going to be in the dark?
NVIDIA SMCI had a hell of a day yesterday. Really nice run. NVIDIA challenging up near the highs, and now it's pulling back here this morning. So obviously there's an analyst commentary or something out there somewhere. SMCI breaking out among both these stocks in the long-term portfolio. We talked about these stocks yesterday. I tweeted about these stocks yesterday. It was a nice move yesterday. Getting a little pullback here, a little check back here. Chat, you got the NVIDIA news? Because we looked through a little bit here. I didn't see anything jumping out and biting me. There's always a headline in NVIDIA, but I didn't see anything that was like, like the jumper that was going to make the stock fall at $8 here today. Yeah. Looks like there's something we're missing.
A nice little laggard play that you found there on that SMCI. We were looking at that last week, and that really has gotten going. Is there any other kind of semiconductor play or AI play like this that's still lagging? I mean,
well, AVGO lagged forever, and we know what that thing's done. That thing is just blasted off into orbit. I cannot believe the AVGO moving. I think you absolutely cannot chase it at this point in time because it doesn't move like that. That was my laggard AI play when it was 19 times earnings back at $800. Now 1,147. So I don't know. Like it's now just gone rocket ship mode. I don't like buying stocks in rocket ship mode.
Yeah, there's not many plays out there that aren't looking like rocket ships, and that's the real interesting part of this market. Let's go. Of course, we got to talk about U.S. Steel. We were looking for a deal for so long. We finally got it, right? Nippon Steel buying U.S. Steel for $55 per share, representing a nearly 40% premium from U.S. Steel's last closing price of $39.33 on Friday. What do you guys think about this long term? Was this just Elon that wanted X symbol and he was like, you know what?
That's what we're talking about.
I saw that yesterday.
Elon Musk is involved here somehow. The Musk
some
theory is
way
that he controls the whole world and he's controlling this.
He wants X.
That X symbol to bring Twitter back public as X.
X.
Yeah, no, I don't think it's anything to do with it. But U.S. Steel, I mean, I don't get it. Why you want to pay $50 with all this potential antitrust issues? I mean, you have multiple, people coming out obviously politicians coming out saying we're going to try to block this deal. The union leader from U.S. Steel was on CNBC last night and basically said he's at war over this deal. And Sully said to him, he's like, it sounds like you're at war. And he's like, well, the war started at 6 a.m. this morning. So they are very worried about this deal. They will fight this deal tooth and nail unless they, get, they said in writing that, obviously they're going to honor all the agreements and everything there for their own union. So there is going to be some hurdles here. There's going to be some time value of money here. You got to consider time value of money is 5% as well. So why people want to pay to $51 or $52, I don't get it. At 45, it would make sense. I think it's too high right now. I think for all this, I don't think there's a better deal coming in because even Cleveland Cliff's interview, he was on CNBC too, and the Cleveland Cliffs CEO was saying that it was I forget who was asking him because I forget which segment it was on. It may have been Morgan that was asking him. But asking, would you be a buyer of U.S. Steel if the Nippon deal gets blocked? And he said, yes, but at a much, much lower price is what he said. So that's telling you there's no, white, knight coming in here and paying 70 for this or 65 or 60. This is going to be as good as it gets, in my opinion, as the 55. I'm shocked it was this high. So, I mean, if you want to sit around for the last $6 or $5.50, you can, but there's a lot of risk. And if this deal doesn't go through, it's not going back to 20 because there will be other suitors, but he was kind of hinting his price was originally, I think, $35 Cleveland Cliffs. Maybe they could go to 40, but they're not going to 55.
Yeah,
so
that they blew it out of the
I think
water
it's
with
still
that.
a ring the register opportunity here. So I think you're going to be in a fight for a while here. So I think you might win at the end. You might get the $55. We could be a year from now before this deal ends up getting done, if it gets done. So I think you're going to be waiting a long time to pick up that last $5.
Yep, time value of money coming into
Very much
coming into play here. Do we care about building permits and housing starts at 8:30 a.m.?
Probably. They seem
do.
to care about everything now. So
Why?
I probably should go wide. I'll probably have sold. I'm like, why didn't I go wide?
Guys, I never pay attention.
You have offers? You have a sell key on your keyboard?
I know. I'm supposed to eliminate this. And in bull markets, you're supposed to eliminate the sell key, or at least hide it a little bit, so it takes you longer to hit it. Save you a couple bucks by selling. A few.
There's only a buy the dip button, and maybe sell the rip button.
Buy
the dip, and that's it. Just buy.
All right. Building permits, Q1. Housing stocks. I'm sorry. Go ahead. Give the preview.
Accenture Q1 adjusted EPS came in at $3.27, beat the $3.14 estimate. Sales of $16.22 billion, beat the $16.2 billion estimate. They reaffirmed fiscal year adjusted EPS outlook, and then they also expect revenue growth of 2 to 5%. So just going through this one, and I'll grab those numbers for you guys as they come in.
Ooh, oh boy, I don't. This is down 661. I've been throwing out the pre-market action. I'd say what happens at 335 here. I'd see 4 lows in that area. So we did trade below it in the pre-market. If you're looking for a gap fill on this one. Not too far away. Bottom of yesterday's range, 340.64, and the close was just above that.
Sometimes there's nothing there, and you just pass.
Yeah, pass. Yep. Okay. Let's. So we are now within 30 seconds here. Is it worth it to go to the minute chart?
I may regret that.
All right, then I'm going to go to the 1 minute chart here just to have some excitement.
Me now.
All right, expectations are expected to come in at 1.47 million there, and then the prior being 1.498. So let's see what we get there. That's building permits month over month. We'll see when those come in here. I'll let you guys know as soon as I get them. And then we also can start at least previewing. We'll take a look into earnings that come tonight. Of course, FedEx on the tape. We got, of course, some stocks coming in tomorrow, so don't miss that. We get a little bit of some General Mills and a favorite here, Winnebago. We'll talk a little bit about that coming up.
WGO.
All right.
I don't see any movement here whatsoever.
No, I don't
so
either.
I'm glad I
Here
didn't
we
go
are.
wide and have to put my orders back out.
I'm
Yeah,
sorry.
like I
Jeez,
thought,
didn't.
guys.
No, don't be sorry. It's like just like I'm scared of all numbers right now because it seems like I'll find some reason to really chop, and they're all in all likelihood.
Man,
we'll find
what happened
hit.
to you guys when I left, guys? You guys just got number rocked or something? I mean, man.
02 and a
Staying away
quarter.
from shorts.
Yeah. 02
Rock
and a
too much
quarter.
on the short side.
All right, let's see. 02 and a quarter. That was yesterday's high. That's the only relevant I have in here. Go ahead, Mitch. I see it on the screen. What do you got? Woo, that's a strong number, it looks like.
1.56 million versus 1.36 million housing starts. So it is a little bit of a good number. And I guess if you're in this environment now where the Fed's pivoting no matter what, you want to see stuff. We don't have to worry about, the Fed's already said they're done raising rates.
Let's get the full numbers though here, because also you got building permits here month over month for November negative 2.5% versus a 1.8% prior. So building permits actually went down there. So it's a mixed noise here. And if you look at building permits for November, it was at 1.46 versus a 1.47, so a little bit under. And the prior being 1.49. So it's actually trending downward on the building permits there. So a little bit of mixed noise, but still, hey, as long as it's mixed or not negative, I think that's a positive, right? What do you guys think?
Market absolutely doesn't care. I mean, here we are sitting up with yesterday's high. It's the only thing, daily highs and lows, 02 and a quarter. So leaking, I mean, I don't even want to call it a leak. We did hit 04 and a quarter. So I don't know. Not the big number, not a big disappointment. I'm sorry I put the 1 minute chart up there. I'm gonna go back to the 30-minute chart, and we're still holding on to the gains. A small leak, a little bit, but I'm sure someone will stick their finger in there and stop that.
And remember, we are now entering holiday trade. And one thing is the Santa Claus rally markets usually go up, but volatility drops. When we start getting into holiday trade, it gets quiet. Why? Because traders are taking time off. Kids are going to be getting out of school. You start getting into, no news, earnings. And we're getting to the end of earnings. FedEx tonight is a big one. So FedEx can be market moving. So we'll keep an eye on that. And then we have Nike on Thursday. But really, we're reaching when we're like Winnebago reports. I mean, there's not a lot of major market movers out here. FedEx is the exception tonight. So I will officially say, tonight, FedEx is probably the last one. Nike moves retail. So Nike Thursday, too. So you have two big ones this week, FedEx and Nike. That's what we're watching.
Oh, USPS going to get a new raise? Someone in the chat saying that they're a letter carrier looking at a raise.
Everybody wants more money, even though
inflation wants money.
We have to tell all these people. Inflation is now gone. You don't need a raise anymore. They have beaten inflation. People in the chat, you don't need a raise anymore. Inflation is beaten forever and ever.
Talk, guys. No,
never need another raise ever again.
I think some guys want to get paid here. What can I say?
I'm not asking for more money from Mr. Market here. I'm now content. I don't need to make more money trading, so I'm not going to ask more money from Mr. Market here because I don't need the raise anymore because prices are no longer going up. So I am now content. And if you believe that.
Raking it in, baby. Bring that money back.
Raking it in.
All right, guys, I'll get you guys out of here. We'll get to our guests. We'll get to some conversation. Of course, we have a great guest, like always, for you guys. Smash the like on this holiday time. It's the holiday season, guys. Smash it up.
All right, folks, moment you've all been waiting for. Craig Johnson, Managing Director, Chief Market Technician over there at Piper Sandler. Mr. Johnson, how you doing today?
I'm doing wonderful. How are you guys doing? By the way, you can't say that we're not going to get raises. Everybody wants a raise, Dennis.
Craig, are you not listening to the Fed? Inflation is beaten, so we don't need raises anymore. So you don't go to Piper at the end of the year. You can say, I'm now content. I don't need a raise anymore because inflation is beaten.
They'll look at you and say, "Make it yourself, Johnson." Right?
That's
We're
how
gonna
it
pay you
is,
this.
right?
We want you more than that. You go figure out how to make it from Mr. Market, right?
Yep. Good old market will make that for you.
Right.
So Craig, a month ago, Goldman Sachs told us that couldn't go any higher than 4,700 next year, and now they're saying 5,100. You've stuck to your mantra a little over a month ago. I probably should have pulled up the exact date, and you just told us just to sit tight here, sit tight. We're gonna have a rally. Got to look at the small caps, and presto, your direct pipeline. Are you a Fed? Are you on the Fed? Or are you? Is that your new job? Are you gonna come on today and announce that you are replacing Jerome Powell?
That I am not doing. That is 100% for sure. What I will say, though, is this is a market that got sort of pushed down too far. It was sort of a beach ball below the waterline. And when you get the breadth measures of the market that beaten up, it springs back. That's what we've historically seen. But, Joel, I think it's more important at this point in time to talk about 2024, if that's okay.
Absolutely, and you can drive there. I know you know how to do it. If you want to share your charts, go right ahead. But yeah, who cares about the past? We want to know about the future.
Well, that's exactly where we're at. So let me just get to the right window here. I think this is it right here.
I can see the future.
All right. So can you guys see that on my screen?
I got you, Craig.
Yeah.
High level trading range, right? HLTR. So 2024, we think is going to be a HLTR. And I hope you guys make T-shirts and hats and everything else to go with it, a whole new clothing line. But HLTR stands for a high level trading range. And I'm stealing this phrase from a good technician friend of mine that used to work at Fidelity by the name of Rich Gula. He's honored and pleased that I'm stealing his title. But at the end of the day, I think this is a market that's going to just grind right up to those old highs, 4,800, 4,025-ish range. Our year-end objective for 2023 has been 4,825. And I really do think we're going to get there in the next 8 to 9 trading days. Like, we're very, very close to getting there. And from my perspective, we're going to get there. Then we're going to probably end up in a period of consolidation. And we probably end up in this high-level trading range probably for a good chunk of 2024 before you finish the year higher with a 50-50 year-end objective. Not that I'm questioning it, but our point and figures came up at 50-50 for a year-end objective. It's going to be a good year next year, but it's a totally different trading setup in 2024 than what we had seen in 2023. And let me show you a couple of these charts that I've put together in here. So take a look at this is what I think the year is going to look like. And everybody looks at me and they go, "You're out of your mind, Johnson, that you're going to go put some forward-looking projections out here like this." But as you guys all know and your listeners all know, I'm not afraid to put my neck out there. I'm not afraid to be wrong, which I wish Wall Street would do more of, to be honest with you.
I agree.
And at this point in time, I just see this consolidation range. And again, think about it. We got a pretty contentious election next year. So if you want to think about what the key themes for next year are going to be, equity stall near the 22 highs, breadth improves and expands, and you enter this HLTR and all these big stocks, Apple, Microsoft, all those Mag 7s, they go from Mag 7 to Lag 7. And you watch all these small mid caps start to play catch up. Put that together with the election uncertainty. We've already seen the Fed number 4 theme has already happened, with them now coming back and saying, hey, we're going to cut rates as we get into 2024. And inflation is moderating, but not enough not to ask for the raise, just to be clear. And then sometime next year, 3.25, 3.5, probably mid part of next year is where you see the 10-year bond yield work your way down to. And that's going to keep a nice steady bid for equities.
So you're thinking mega cap. Sorry, you're thinking mega cap maybe just hangs out, consolidates, and it's more going to be that small cap continues to play the catch-up trade here as rates are as inflation has peaked, and it looks like rates have peaked as well.
Absolutely. Look at this little chart that we put together in our weekly piece yesterday, right? If you actually look at small, mid, and large stocks and compare that to the Mag 7, now the Lag 7, you can see here that small cap stocks are outperforming even your mid cap, and they're outperforming the Mag 7 and the S&P 500. So the breadth of this market is really starting to expand.
Yeah.
That is a constructive and healthy sign for this market. But there's
I'm-
such large weights of the market. That's where the HLTR and the consolidation range comes into play, guys.
So I guess it depends the index you're looking at too. So you think the IWM probably going to outperform the S&P next year?
Oh, I absolutely think that is going to be the case. And I think for the first time, let's see here. Hang on. I think for the first time in a while, we're going to finally see this Russell finally start to break out of this 2-year consolidation range. Because if you think about the composition of this particular index, it is primarily financials, industrials, and healthcare. Healthcare is still struggling, but the relative strength inflection point with these financial stocks is absolutely amazing. And again, Dennis, look at this chart right here. I'm going to zoom into this so you can see this. Not everybody gets to see these charts, right? But when you zoom into these things and you look at the total return of the financial sector, this is all financial stocks above a 25 million market cap and a $2 price. Here is unweighted and market cap weighted. Come on, buy, sell, or hold on this chart.
It looks like we're starting to, and again, just thinking of the rate environment here too. I mean, if rates have indeed peaked, if we do believe the Fed here, it's got to be good for all these interest rate sensitive stocks, not just financials. I mean, there's so much in the IWM that is, that's really been hurt by higher rates.
Right.
So if we're going to take that, and that's what's really been holding down the ball. Like you talk about this ball under the water that wants to stay. What's been holding down the ball is the Fed. If the Fed's ready to release that ball, I'm with you here. I mean, there could be a catch-up trade in 2024.
The Fed gave you the green light, right? For equity.
And that's why the violent rally in the IWM. Like, I mean, violent. Like, you don't often see an 8% move in 2 days, and that's what we saw in the IWM. I cannot remember the last time I saw the IWM spike 8% in 2 days off of a Fed meeting. I mean, that's an incredible move.
Just wait until you get the price action of breaking through this overhead resistance right here. And watch this index move very, very quickly up to at least 2132, and then probably more likely back up to 2292. And when that happens, all these small mid-cap stocks are going to absolutely continue to be strong, and they're going to continue to keep pushing higher. And again, if the financials are working, that's a positive and bullish sign for the market. And again, if you just come back and scrunch up this chart, look how long we've been forming this sideways consolidation action in the Russell. I mean, it's been years in the making.
Years
in the making.
You could go back, Craig. You could even go back farther. I mean, IWM in 2018 was 173. That's where we were last month. You could argue that this is 5 years of really going nowhere. So, like obviously the range, we're looking at the recent range, and we had the 2020 breakout. But really, you take out the COVID dip and then the subsequent rip afterwards. We kind of got nowhere for 5 years.
Correct. And this will finally, I think, be ultimately a catalyst for equities to work with the Fed sort of coming back off. But the other thing that we got to take this shorter term perspective, and then we need to put it into the longer term perspective, guys. And the longer term perspective that we got to come back to is, we talked about it last time, but it's worth repeating. We had a 40-year secular change of interest rates. Okay. And when you reverse a 40-year secular downtrend, you always will surge through it and you'll have a check back. But the thing is, I know this is a short-term trading show and a short-term sort of thought process, but it literally took 7 years between the peak to the reversal to the retest back in the 1980s. This is what we're going to have, and we're going to have some great trading coming up for people as we process our way through this. And people keep asking me, how far are rates going to go to the downside? Well, rates to the downside are going to probably trade down to, I think it's going to be kind of 3.25%, 3.5%. But the cool part about this, and the way to think about this is, take a look at this chart I pulled up right here. You're thinking about this all short term, which is great. Retracement levels and everything else broke the 200-day. And now if we crunch this chart up and we think about coming off of the lows back in the 2001 period of time, if you do your fib retracements now, look at where you finally broke below right here, 23.6 retracement level. We've broken that. Means the next level we got to get to is right here at a huge support level at around 3.25%. We're going to
Wow.
be there midpoint next year, which means equities keep working probably into Q1, get your HLTR, go sideways, wait for the election, and then you finish higher, 50-50 at year end. That's what we're thinking.
I like it. I like your thought process, and I've been along IWM for a while, waiting for this catch-up trade. So I hope you're right, Craig.
Yeah.
Now, what could throw a wrench in this, Craig?
My question. Yep.
Well, I think, the election, any sort of further conflict in, geographical conflicts. We got the Middle East, we've got Ukraine, we've got those issues that could certainly put some conflicts into it. Taiwan could put some a wrench into this process. And, if the government can't get the budget stuff figured out, that could certainly put a wrench into it. But overall, this is going to be a very, very contentious election coming up, left or right. I just think everybody needs to sort of keep their heads on straight and sort of think about what is good for the country and not necessarily for their wallets, even though Dennis is asking for a pay raise, and sort of put all these pieces together and figure out, like, this is the best country in the world. Let's just keep it that way. And everybody's got to sort of help in that sort of shared cause.
What about looking other places, Craig? And we were talking about the leaders, the laggards. Nothing has been more of a laggard, right, than the Chinese market, right, and
Emerging markets
Alibaba.
altogether.
Talk to us about that.
So as I come back and I look at some of those charts, I'm going to stop sharing. If you want to bring some of these charts up on your screen so we can take a look at some of these things. 1 second. So if we look at, like, Baba and some of these others, like, they're still in downtrends. I have not seen a sort of on the charts inflection for these names quite yet. So from my perspective, more time is going to be required for a lot of these Chinese stocks right now. Again, firmly believe that what I'm seeing in the U.S. is we are the strongest, deepest, most liquid markets in the world. I don't think that's changing. The reserve currency status isn't changing. So the U.S. is the market to be.
What would change your mind? What would get you more interested? I mean, Japan's been doing pretty good. So if you break it down, it's just stay away from China. The EWJ has been constructive. I mean, over 30 years, it's gone nowhere. But at least in the last, year, at least from my Twitter feed, everybody's been going pretty good on the EWJ, on Japan. So can you separate it out? Is there some countries you like better than other countries? Like, could you get interested in Japan?
Well, I mean, it's starting to get interesting, but I was kind of hoping that they were sort of getting back to more of a normal environment and moving away from some of the easy money policies, and they sort of just threw that right back. They can't seem to quite get off of that. So
yeah,
you pull up the EWJ, Joel, if you're running the controls or
Yep, EWJ it is.
Yep. And as you go through and you look at this, it's kind of like, all right, you got your 30-minute chart. Where's your daily chart?
Right here?
Yeah.
Right here. I'll make it big for you.
Yeah. So you look at the daily chart, we're kind of like just sort of consolidating still, right? I mean, haven't broken up above those highs on the EWJ at 60, 64 up there. So
I think the monthly is a little bit more telling here to show the consolidation, because the $64 area has been going back to the middle of the year, like 64.07, 64.05. So there you're looking, and that would be a break. It looks about the 50% retracement too here on the EWJ. Just go on, before we let you go, just metals and Bitcoin. I mean, obviously, I know you've been a long time bull in Bitcoin. Metals have been, very volatile as of late. Where do the commodities, metals, where do they fit in this scenario? It's just going to be the buy everything kind of market.
Well, materials are a neutral for me at this point in time when I go back and I look at our total return relative strength charts. That being said, take a look at like XME. You pull that up on your chart.
XME?
Yep. And this is where you got to sort of break out the difference of what's actually in some of these, ETFs and stuff. Coal is a huge component inside of the XME, and that is not going away anytime soon. The country needs to figure out a more sustainable, well, not only the country, the world, a new base load driver for electrical generation. And it's can't be coal, but for now, that's all we've got. So Take a look at a chart of like a BWXT, a little hot special for you guys. Take a look at this chart, right? These guys are making the small nuclear reactors. And I know that Microsoft has come out and said, hey, we're going to go power the cloud on these small nuclear reactors. And that's what they want to go and do. So pretty good looking chart on a monthly basis there, guys, just completely breaking out. Buy it on any pullbacks. It looks like a good looking chart.
You're getting a little pullback here right now, so maybe this isn't a bad idea here at the BWXT. I just wrote it down.
Then I had a successful event because you wrote it down. but you know, think about all those names, and then also think about in consumer land. If these rates are coming down, consumers are going to have more money. Dollars come down. You've also seen oil come down in price. Look at consumer spending, like something like Skechers. Take a look at that one. What a great looking chart setup on Skechers. I mean,
we've been running on some of these things. Have we run a little bit too far too fast? Are you waiting for a pullback on some of these things? Because even the IWM, I look and I think, man, it's been a pretty big move though. Here we were 165 or 161 2 months ago. Now we're 198. Do we need a pullback before, or can we just chase here?
I think you're going to get a chase into year end for sure, because so many people are mispositioned. So many portfolio managers have been on the wrong side of this particular trade. So I think, Dennis, to answer your question, that chase is going to happen, and then you could get a pullback perhaps into next year. Also think about the Santa Claus rally discussion too. Last 5 trading days, first 2 trading days, according to Yale Hirsch's work. And when you do those statistics and numbers, you can get another 2 or 3% in here. I mean, I'm hoping for it. Our year-end price objective for 23 is 48.25. We started the year at 46.25, bumped it up in July to 48.25, thinking it wasn't done, and now we're 1% and change away. I think we're going to be there. We're going to be on the mark. Fingers crossed, guys, you know.
Yeah. Craig Johnson, Managing Director, Chief Market Technician, Piper Sandler, been guiding us through these markets for years now, going back to COVID and pre-COVID. And Craig, we appreciate your thoughtful analysis and the time that you spend with us. And have a good new year, good vacation time, and we'll be dialing you up early in January. I'm sure about that.
Thanks, guys.
Thanks,
Have
Craig.
a good one. All right, let's get back to the markets. How we looking here, Joel?
No pullback. I mean, no pullback. Like I wanted to. I said we were leaking. I didn't even want to say that we were attempting to go down. Findings intraday, pre-market support now at 4,800. Looking at what he says about the cash projection. The cash is at 47.40. Probably going to be a little bit higher than we opened. So he's talking another 70, 80 handles. I'll put the cash chart up here. Of course, we're much closer on the cash here. 48, what the all-time high in the cash, 48.1862. The divergence for the futures, of course, the rolling front month contract. You go back to 22, you're figuring interest rates and the time value of money. So a little bit different here, but for right now, for all intents and purposes, you got to keep an eye on that cash. I'll just call it 48.20. We're at 47.40. That's 80 handles away. We better do some giddy up to get there by the end of the year. But you know what? You can't sell this market short. That term can be used a couple ways.
It's the seasonality here too. Like, it's hard to get bearish, to Craig's point, in this next 8 trading sessions. This is historically a very strong time. You got shorts caught all over the place. Here you have quiet period. What's the headline that's going to knock this down? Unless you suddenly get profit taking, which, why are you going to take profits on the Magnificent 7 when in 8 days you don't have to pay the tax for it?
Oh, there you go. Yeah.
I mean, this is just setting up. It's all those factors that just lead me to want to buy dips for the next 8 days. Now, a lot of things might change in the first week of January 2024. It often does. Sometimes those trends hold through the year like they did last year. Sometimes they don't. But I mean, it's hard to turn around and say everything is going to change in the last 8 days of the year, because historically it does not. And the main reason for that is tax purposes here. If I'm sitting on 100% gain in a stock like Microsoft, I'm not selling it until Jan 1.
Why?
And that's where it leads me to thinking, right? I see all this exuberance, I'm gonna call it, and these guys, like everyone out there is like not even just like, let's say a little bit bullish, but to the extreme bullish. Is this setting up for a disaster into next year? I think this is. I
I'm
can't.
off that bandwagon now here, Mitch, and the main
I
reason
can't do
is
it,
that
man.
the Fed has pivoted. I
But
did
have
not
they really?
anticipate this.
Have they really? I mean, they're just talking about it.
It sounded like a pivot. It smells like a pivot. You know, sometimes it's like
If it looks like a pivot,
smells like a pivot. It's probably a pivot. And Williams and everybody's trying to back off the comments because Powell was too blunt about it, but they pivoted.
I don't know,
I
man.
mean, it's hard to just turn around and say, and I gave this argument when you were away here, Mitch, too. It's hard to just turn around and get so bearish this market here now, because if they are now, pivoted, if the market starts to show weakness, they'll start lowering rates. And we know what happens then. We went through before. They lower by a quarter just out of the blue, and boom, this market blasts off into orbit. So now you're back to fighting the Fed. You were fighting the Fed by being long stocks in early 2021. You got punished for that. But at this point in time, I think if you're shorting stocks, you're fighting the Fed going forward here now, unless inflation starts to blast off. That would be the wild card. Or unless you get some macro geopolitical event that can change things too. But with the information that we have at this point in time, it's hard to think that everything just falls off a cliff. So I think you're looking at opportunities. That laggard list I'm putting on for the January effect, I'm not chasing the Microsofts and the Googles at this point in time, because I do believe Craig's right and maybe there is a catch-up trade there. But I am looking at some of those laggards and stuff that hasn't. Look what I bought Bristol Myers. I mean, I'm buying some stuff that I feel like could play a catch-up trade. That has been an absolute dog. But, I think you just got to look at good companies at reasonable valuations, but maybe staying away from those high valuation companies right now, because we don't need to hide out maybe in Microsoft and Apple and Google in 2024 if rates are indeed going to start going down.
And don't get me wrong, guys. It's not like I'm playing the downside here, but I just feel like, when everybody gets on one side, I very rarely have ever seen that work out. And that's
true.
all I'll say.
And it's a scary
everybody's
thing
on that side right now.
To go with the crowd.
What bears? What shorts are still in the market? If you're still shorting this market and you're still short some of these names, you're literally like, you just don't even know how to trade.
But there's people underinvested, Mitch. That's the thing.
That is true. That is true.
I'm underinvested.
That I'd give you,
Yeah.
Joel. That
I'm
I'd give you
underinvested.
1,000%. There's a lot of people underinvested.
And whoever does, they're competing with whoever short, whoever sees a light of day. They're I mean, the after the initial move in the after the Fed speak, and I'll go with the spider. We had the initial move, and then like 455. Just like, look how many days. That's just someone saying, yeah, okay, I missed it. I got to get in. I got to get in before year end. And then boom, then you had another blast off. So there's a couple different combinations of things. You always got to be, on alert. You could do some technicals, but like what I like, when I'm doing looking at my levels and looking at things, I'm like, there's nothing here. And when there's nothing there, the biggest trouble you could get yourself is saying, oh, I think the market's going down. Well, we didn't think that Paul was going to pull that pivot out of his hat like he did. We are, once again, we'll just keep an eye on that pre-market high of 48.04 and a quarter. We always love to see follow through that early in the session.
I think we're leaking a little bit. There is a lot of sell imbalances here this morning, so that has something to do with it. The banks have some heavy sell imbalances, some individual stocks. I can just give you Bank of America, 309,000 to sell is significant this time of day. I see Citigroup, 44,000. I do have a day trading position on Citigroup. I also see Snapchat, which has had a run. It's down 157,000 to sell there too. I do have a trading position on that one as well. I am seeing some sell imbalances here this morning. So if you're wondering why we're starting to leak a little bit here, they've been sell imbalances all morning. The market keeps thinking, well, they're going to eventually start to turn to buy, but they haven't turned to buy yet. So, I mean, now you're waiting an hour. These imbalances that I'm talking about come out at 8 a.m. for the New York Stock Exchange stocks. So we've had a full hour where they haven't flipped it all yet. And they've just been kind of remaining on the sell side, more to the sell side than the buy side. And I think now, you got traders looking like, well, if you're going to see this kind of sell imbalance here, these stocks may not open up as high as we think they're going to open up. So we are seeing a small leak. This is to the day traders out here, this conversation.
Yeah, and I just wanted one quick note on the Snapchat, that it was a result of an upgrade yesterday, right? After this magnificent run of the stock, you're telling me to buy it now, and and it wasn't like a dead open high.
Chase is on here,
yeah,
Joel.
yeah.
There's Chase on in some of these stocks. Yeah.
All right, guys. In the chat is loving my bringing a little bit of some bearish into this conversation. And the big thing for me is just to bring the conversation, right? Because I think it's an important thing. If we're all just going to be nonstop bullish, the day can come where next thing you know, something happens and then everybody's flipping. I always like to bring both sides of the coin because I think it's so important to think about it as an investor, especially in the short term. I mean, there's no reason for it, right? Everyone's going to be in the bullish tune. But I've always said the Max Payne trade, you guys have taught me that at some point that's going to turn. It just can't just be just that everybody is just going to hit the buy button, buy every single stock in the stock market right now. The whole world is going to be great next year. All wars will stop next year. And everything's going to be, and interest rates will be back down to 4%. And
it's
not going to happen, man.
It's October. I mean, that's what we've had. But if we really look at, perspective and think about what the IWM has done in the last 6 years, we've gone nowhere. I mean, so we have not been in this raging bull market in the IWM. We have been in Mr. Nowhere land where you bought IWM at 170 in 2018. You're looking at 198 today and you're thinking, wow, that really sucks. Stocks are supposed to double every 8 to 9 years. My IWM is up 10% in 5 years. So I think, there's just maybe, to Craig's point, a catch-up trade here. And, maybe I've got to look at checkbacks here to get rebuilt in some of the portfolio. But, new information comes in. And again, to your point, Mitch, is if we get new information, if China was to invade Taiwan, if something else happens, go ahead and hit the sell button right away. Like, your job as a trader is to trade the information that you are given. Your job as an investor is buy good companies at reasonable valuations. That's the difference. So you're an investor, good companies, reasonable valuations. Don't worry about the headlines. If you're a trader, you absolutely worry about the headlines. You worry about every headline. You have to worry about the headlines because they move markets.
And if you can't find a headline, then you really need to worry.
Yeah,
right.
Exactly. Then everybody knows it except you.
Like NVIDIA, I guess someone said Edgewater had some cautious comments on it. So whatever.
Down Edgewater.
Yeah.
Edgewater.
Okay.
Okay.
We'll see what happens, guys.
We're
All
late.
right, guys. You guys keep up with Dennis Dick, Joel Alconen at Spoos, of course. You guys can check him out. Premarket Prep Plus will get you guys over, of course, to the next show. That's live trading. That's coming up next. And don't forget, like always, guys, all content is for informational purposes only, not to be used as investment advice. Opinions do not represent those of Benzinga, and hosts and guests may maintain positions in the securities discussed today. Now to get you guys over to live trading, that's coming up next. Don't go anywhere. Find out what I'm able to have up my sleeve today. Got some good Valero, at least in a good swing position. We'll talk a little bit about that coming up. Don't go anywhere, team. Stay right here.